Well, good morning. Yeah, Justice. It's PK here with Out of the Box. And let me tell you this. In my 35 years plus trading experience, the question I get asked the most is, does technical analysis work? Does looking at those charts, can it tell us something? Oh, there's a million books. You'll see a million YouTube channels showing I bought it here, it went here, put your stop there. This line crossed, all this information. Listen, so I get this question asked all the time, and I'm going to tell you, I'm going to make it very simple from all the years I've been trading. Futures, stocks, mainly futures as you know. Let's just take one hit of the cigarette and we'll begin. So anyway, the question is, do these charts really mean anything? Can they really help us? So let me just give you the overall situation. My overall take on the things. A, get rid of that, come a little closer. Okay. Another beautiful morning here in Florida. Got my notes in front of me. First of all, this is a skill and a creative art form. No different than if you want to be a guitar player. I play guitar. I played in a band when I was young, but if you want to be an athlete, it's really no. It's actually, forget about being an athlete. It's wrong. It's really about more like being a musician, or if you're a painter. There's a visual aspect to looking at these charts, and there's also skills you can develop. And in fact, I mentioned one of the great books, is Technical Analysis of Stock Trends. It's a classic. You can learn some of the basics. But all these charts and all this information that can be done, forget about it. Let me tell you, also, you have to remember, looking at the charts, it's not a science. It's so one of the problems, all of us, I've been guilty of this too. Many times we want to turn it into a science project. If it doesn't hit this line or go too far, or it doesn't quite meet the criteria, you say, I'm not going to do it. And what happens? You know what happens. It takes off without you, or crashes if you're going short. And you're not in because you're just a little too close to it. You turn it into a science project. And I think it's one of the biggest mistakes of people develop, because there is no one way to trade, as I mentioned before. They want to turn it too much into a science project. Don't do this. Give yourself a little bit more flexibility. And C, this is probably the most important thing, is I don't believe charts, technical analysis, what everybody shows on their websites, newsletters, I don't care, it's been books. I don't believe it predicts the future. I believe it's still 50-50. So you're saying, it's kind of like, listen, it's not like playing poker. If you play poker, you pick up a pair of aces, you know you have a high probability of winning. You play blackjack in Las Vegas, you pick up an 11, the dealer has a 6 up, what are you going to do? You're going to double down because the odds favor you're going to win that hand, especially if you're counting the deck down. I'm telling you, looking at these trades, looking at the charts, and figuring out which trades you're going to do, because there's a million different indicators. You can make yourself crazy. So, bottom line, it doesn't predict the future. I think it's always 50-50. So, what are charts good for then? And let me tell you, what they're good for is where to make that try, where to try your buy, where to try the sell. It doesn't mean it's going to work. It's still 50-50, but there's much better places. This is the skill in learning how to read the charts, and you can learn these things in books. I'm not going to go over it here. These things you can learn, but I'm going to break it down to simplify what exactly you're supposed to be looking. You must understand. Let me see here. So, let's talk about indicators. Because there's so many indicators. I see, now the technology, the charting services, you bring that drop-down list, and people go crazy. So many indicators, this. Let me tell you, I'm going to make it real simple. I think there's I'm going to break it down into 3 things. Which you must know. You have to understand these things, and I recommend you bringing these things up. I don't care if you're a stock, future, you want to be a day trader, short-term, swing, long-term, you must be aware of these things. First of all, the classic, the moving averages. I don't care, exponential, simple, doesn't matter. It really doesn't matter. What matters is what time frame. You want to watch the 10 period, the 20 period, and the 50 period. Forget about the 200, because this happens so rarely, especially in the stocks, that maybe if you're a very long-term stock investor, the 200 really doesn't apply. Maybe if you're a short-term trader in the futures, you can have the 200. I don't have the 200. So that's what you must have that up, and you must know where your stock or your future is trading out in relation to the 10, the 20, and the 50 period moving average. The second thing is basic, the stochastic. They all come standard. I believe it's the 14 period. Exactly that. It's very simple. Throw that up. I'm sure you've read, there's all sorts of buy. It's oversold above 80. Yeah, it's a buy when it's down to 20. Of course, there's much more to it than that, but you must have that up. And the third thing you must be familiar with is the very simple charting technique, just basic support and resistance. You take your chart and you draw your lines below the support and know this number and the resistance above it. You must know these levels. I don't care what time frame of trader you are. It's the same. And people always ask me, PK, what about trend lines? Should I draw those trend lines? I say no. Forget the trend lines. This is too subjective. You draw them one way, the other guy draws them another way. And you want to keep it as simple as possible. But the reason these 3 things are important, the moving average, the stochastic, and the support and resistance regarding the indicators, is because everyone around the world is watching these same things. Everybody has it up, whatever time frame trader you are. So you must know these numbers, because they can be important if you happen to be in, and what to do and what to look for. It doesn't mean they're going to hold, doesn't mean it's going to work. Remember, it's not predicting something, but it's something you need to be aware of, because everybody has that up on their screen who's got charting, and everybody does. Even when people say they trade fundamentals, believe me, they're still looking at the charts and they look at these things. Just want to be sure. For me, I add one more indicator, which is not so popular. You don't see it, and I recommend it, which is the ADX, the Average Directional Index. Again, the standard. I think it comes to a 14 period like this stochastic. It doesn't really matter, 12, 14. And this goes with the stochastic. What this shows, it's just some indicator, are we in a trend or not a trend? And this kind of makes looking at that better. Of course, I could do a whole video on how to just listen to that, but that's something I add. It's not something you need to do, but if you want to take it one step further, I'd throw the ADX too, because you want to know, because a lot of people say, the market's overbought the stock, I'm going to buy it, but it keeps dropping and dropping and dropping and dropping. And meanwhile, it's been oversold, and it keeps dropping. This is because we're in a downtrend. You don't want to be buying. And this is where the ADX comes into play, especially when you get a reading above 25, 30. You'll start seeing these long-term trends, and this will keep you from trying to bottom fish and going long down there. And vice versa. It's going up. You see the stochastic, we sell it at 80, or the lines cross. And meanwhile, you find yourself, you're in a trend. Of course, we know that the trend can change immediately. But you have to have something to go on to at least analyze these things quickly and simple, and not be overwhelmed by so many different things. So those are the indicators. Let's talk about the chart patterns. And there's really only 3. Again, not about drawing a bunch of lines, because they're very visible, especially in the daily. More in the daily chart, the weekly chart, stock, future. The intraday, 5, we start going the smaller time frame, but it's not so critical because most of the people are trading longer term. They're not day traders. So, but regarding your daily, everyone in the whole world who trades, I don't care if it's gold or silver or Bitcoin, they got that daily chart, and you should look at the weekly. And the 3 chart patterns are, you can main books on these things. They'll show you pictures, describe it, which is A, you want to know what a reversal is. 2, you want to know what a key reversal is. And 3, you have to understand when you see a price gap, and this goes up or down in the gap. A real gap, and what this means and what this could mean. And again, I'm going to say this over and over again. This does not predict the future like everyone thinks it does. Measured moves. Because of this, because A happened, then B is going to happen. I'm telling you, if it was that easy, we'd all be zillionaires sitting at home, and it'd be easy. So by definition, it can't work. Even though you'll see people, they'll give examples. And yes, sometimes, because remember, it's 50-50, so half the time you can find the perfect example. You'll see it in the books. They always show the perfect buy here, the perfect, everything lines up perfectly. And I'm not saying it was a bad trade. It could be a great trade. But it doesn't have anything to do with predicting the future. It just says it's helping you. You know what? I'm looking to buy this stock or this future. This is the place I want to give it a try. Or vice versa, when you look into a short, try it here. It will keep you out of a lot of, I call these bad trades. Kind of like the poker in a way. You know, for you poker players, you always try to play the better hands, the good hands. No need to fool with the horrible hands, 2-7, 3-8, all this combination. The trading to me is very similar to the poker. I did a video about this in the past because of it. You know, I don't know if you can hear that. We got this gardener back here. Again, I wish I could scream at him, but he's got headphones on. Anyway, so that's it. A reversal, a key reversal, and a gap. Be familiar with those things. Because let me tell you, why they're important is because when they work, they really work. This is the difference between how I look at the charts and how everybody else does. I'm not saying because it's a reversal, it means it must go tomorrow or the probability is higher. I don't buy it. I don't believe it. I don't see any evidence. That technical analysis is a predictive tool. Of course, I'm sure you could find all the studies you want, but I've never seen anybody do it. Yes, have we made trades where it lines up, everything works? Of course, but how many times everything lines up perfectly, whatever that is for you, and it doesn't work. And I'm telling you, over the long run, it'll be half the time. So really, it's really random. In the long run, it is random. So it's not a predictive value in terms of that regard. But you must be, when you see these things, these like a reversal, a key reversal, which happens rare, and a gap, which is rare too, you got to pay attention because everyone sees it so visible. And then let me see the last thing. Let's see, we talked about that. So let me see what you really want to know. Indicators, that the chart patterns. Yeah, so again, I use charts. I call myself a technical analyst, but you're never going to see me make a prediction that, because I'm buying here, therefore the probability is going higher. I'm somebody who was a very big math person when I was young, probability, statistics. I don't see it as, again, it's not like the poker, it's not like playing blackjack, it's not like playing dice where you have some fixed outcome. The trading is an unknown situation. There's too many variables, but you want to be aware of what the whole world is looking at, and you see all those other indicators. When I look at my trade station, the drop-down list, they're all variations of these things, and there's not one better than the other. I'm not saying moving averages are some big secret, or that stochastic. The point is that everyone in the world you're trading against, you're up against, they're watching these things. They might customize it some more, change the time frame, but you need to be aware of these levels, and these things can really help you. I think of all this video, that what I'm telling you now, as you see, I'm doing it in less than 20 minutes. I'm telling you, in 35 years experience, what the outcome is, with chart. And I'm a huge believer. I think they really are incredibly helpful on what hand to play, meaning when to make that trade. I don't care what the time frame. So anyway, this PK, take a listen. This video is critical, very important. And the other video I did about risk management and the psychology of the trading, this is also important. But the charting, we all look at the charts. Please listen, take my advice, study these things, know these things. It was only going to help you. I don't care what type of trader you are. It will help you. You must know what the rest of the world is doing. So, PK, living out of the box. Always live out of the box. Make the life is now. Take it to the max. Great trading. Wish you a great day, you guys. Talk to you another time. Bye-bye.